I'm Ashton Addison from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Alex Bustos from the Be the Trader podcast. Alex, welcome to the show and thanks for being here.
Thanks, man. I appreciate it. I'm excited to be here.
I'm super excited for this conversation as well. I think it's going to be super interesting. I'd love for you to just kick it off first with your background in trading in the markets and what really got you interested in trading and producing content as well.
Absolutely. So I've been trading for about 4 years, and I, have the story. Long story short, I ended up leaving my corporate job just to go for trading. Failed, went back to work, failed again, then left, failed again, went back to work, and then this is my third time. And I can just tell you that trading is not easy, and that's what the show's about. That's started to create content about sharing that it's not easy to be a successful trader, but it can be done as long as you consistently work at it and you focus on the process over the profits. So I've been doing that, and then I became consistent. And because I think the show really helped me do that, because I'm sharing my journey, but also interviewing other successful traders, and then hearing them has helped me become consistent as well.
For sure. Yeah. And that's great that you're letting people know that, you have failed and you failed again, and traders often do that. And if it was easy, then everyone would be a trader, right? Everyone would quit their job and just be a full-time trader, and they'd win all of their trades that they made, but it really isn't that easy. And so I'm glad that you have that story, and the fact that you've also turned it into a podcast to share with others, I think is really valuable as well, because you learn a lot more from failures than you do from successes, and I think that's what helps push you forward, right?
Absolutely, man. Absolutely. I couldn't agree more with that.
Now, I was reading into your blog, and one of the topics that you'd mentioned was part of your approach was trading like a scientist. And I'd love for you to elaborate on what you mean by that.
Absolutely. So trading like a scientist is really getting away from the idea of money, right? When we're trading, anyone who's interested in trading, whatever it is, crypto in your case, they want to make money, right? They're either chasing it because they want to leave something they hate. And that's typically what drives people to the equities market. And so because of that, we are already attacking the market in the wrong way, right? We're already looking about we're watching every tick, because every tick means we're winning or we're losing, or we're giving back, or we're not taking as much profits. And every trade ends up making us frustrated, even when we win. Like, because if you win, you left too much on the table. If you win, you knew you should have held longer. Or if you lose, I knew I should have cut it sooner. And to get rid of all that emotion, but still trade real money, it's more of a experimentation. Like, when you come to trading with the idea of, I'm going to experiment, I'm going to explore. And sometimes you need to downsize. Like, when you go into experimentation, you should probably, some people should paper trade. Some people should trade real small, where they're just risking $20, $30, something like. It doesn't matter, right? It doesn't matter if you win, and it doesn't matter if you lose. Because so that way you're open to just all types of scenarios, and you can actually look at the market with more of a unbiased opinion. And then with that experimentation, you can say, you know what, you can accept the experimentation, where there's probably ideas, someone's probably listening to this and they're like, man, there's some certain setups I want to try, but I don't, because I'm scared to lose, right? I'm scared to do it. But if you go with the scientist approach of like, okay, here's my theory. Every time I see this setup, this typically happens. So I want to set up my risk at this level, and here's my plan. Here's where I want to exit. Here's my trigger. When this happens, I'm entering, and then you let it pan out. And if it doesn't work, your theory was wrong. What do scientists do? They just scrap up that theory, throw it away, and make a new theory. And they keep going. Like, they don't get bogged down. They don't get upset. They keep pushing forward. So that's what it's all about. It's just like separating that emotion from the money, which is so hard to do, especially with Twitter nowadays and people just sharing their P&L. That's all they do, is just flexing all day. It's nonsense. So, like, to get away from that, focus on the process over profits.
Yeah, I like that, Alex. And I think that it definitely plays a role, because a lot of people, I find that they first get interested in the markets either through FOMO or through FUD, and they see that the prices are going up of something and they feel like they're missing out, and that's why they initially jump in. But of course, the entry point is the beginning of your theory, and if you're jumping in at the top, then it's not, you're not going to have a great risk to reward. And I just wanted to dive in a little bit more on your trading to bring some more context. I know you're trading in the equities markets, and you're mainly trading day trading, which is going to be different than a lot of people that are investing. But personally, I've been interested in Bitcoin markets, hedged assets as well. Have you dove into other markets, or have you stuck within equity markets, and why or why not?
I've just stuck with equity markets. And the reason I've stuck with that is, to be honest, man, it's because it's been taking me so long to find what works for me. And
Mm-hmm.
now that I found what works for me, I want to just improve it every day and then get better at it. Because once you find your niche, let's say for you, it might be crypto, whatever it is, once you find your niche, then you focus in on it. And then you'll
Mm-hmm.
start to discover new niches within that niche, which is so crazy. Like, you'll think you've discovered, what works, but then when you start to really hone in on it and take it apart, you'll get better entries, you'll get better size, you'll get more confident, higher rewards, higher win percentages, and you'll really become like the best at that one setup.
Mm-hmm.
And so equities, I mean, for me, I finally found what works for me. I like a short sale. That's my bread and butter. And so when I see my setup, I'm going at it. And now that I found that, I'm just slowly like growing it and getting more, bigger and bigger and bigger. And right now, I don't want to break that. I don't want to break that. So I
Yeah.
try to stay in my right, stay in your lane for a little
Mm-hmm.
while, and then maybe when I have like a decade of experience, maybe I'll start to jump into another market, because there's something to be said. Like, trading's not easy, right? Trading, to think you could just jump into a new market and then take it over and be like, I'm going to get this quickly,
Mm-hmm.
is naive, right? And I was like that. I was naive, and I was very just ignorant to the markets, where I just thought, hey, I have a lot of money and let me just throw money in the market and I should be fine. But no, it's the worst thing you could ever do. And so I just know now that I've been humbled enough that, I just know that it's not for me yet, but
Mm-hmm.
maybe one day. So I just like to stay in my lane.
Yeah, no, that's great advice, Alex. And that sort of reminds me of, Dave Portnoy. He's been trading in the stock market, and all the people on Twitter have been trying to convince him to jump into Bitcoin as well. And when he finally did, the next day it went down, and his mentality throughout his this summer trading stocks was, stocks are only going up. And when Bitcoin goes down one day, that's it, I'm out, right? And it continued to go down after he got out, which was good. But today it's above where he sold. So, it's about that time frame as well as the entry point. So that's super interesting. And speaking of 2020, you mentioned that you've been a trader for about 4 years, but this year there seems to be a lot more hype around the stock market. With the pandemic, there's been a lot more time for people to be following charts, and some people have been working from home, or they have more time to look at the charts. So have you been influenced positively or negatively by the pandemic and trading, and has it affected your trading?
It definitely has affected my trading, because the reason I say that is because the market has gotten a huge influx of traders, just tons of new traders. And we call them the Robinhooders in the small cap land. And I trade big caps now too. But just everyone says, hey, with the Robinhooders now, we have way more volume than we've had in the past. And I'm talking where we just had a ticker, I think it was Hertz HTZ yesterday.
Mm-hmm.
You look it up. It had 1 billion shares traded yesterday. I was just like, this is madness. And every day it's a norm now. If you're
Mm-hmm.
just coming to trading, you probably think this is normal, which it is for you, where you see uh, stocks going up 2, 3, 400% every day.
Mm-hmm.
Whereas a year ago, we might get one of those once a week, maybe once every 3 weeks. And we're like, yeah, this is great. So it has affected your trading, where you need to be aware of, hey, the volume's different now. So if you still trade the
Mm-hmm.
same way you did then back a year ago, then you're going to take a lot of losses, or at least a
Yeah.
lot of paper cuts, or however you manage your risk,
Mm-hmm.
until you learn. And I actually went through a period of 2 months where I just broke even.
Mm.
And I actually lost like $100 maybe. That's break even to me. Just small loss, or like a small win is break even to me. So
Mm-hmm.
like it was frustrating, right? And it's those happen whenever I didn't recognize, like, hey man, like maybe I should take a step back and see that maybe this setup still works, but with the new influx of traders and
Mm-hmm.
the more volume, that means there's more market makers or algos. We're seeing a lot of algos out there where they're just squeezing so many traders. And when they squeeze all these traders, it's just making the pattern evolve.
Mm-hmm.
Where now it still works, but you have to wait for certain key areas to actually trigger before you take your execution, because they understand, for some reason, I guess these computers are smart, where they understand where we all are at the beginning, like how the pattern used to work, and now it's evolved. And so they just squeeze all the newbies, which they even squeeze the people who've been on it for a while. Like, I know a lot of traders who have been squeezed a lot in patterns that work like 99, like they just work often, right? And now they're not working as often, so we just got to adapt. So definitely.
Yeah, that's really interesting that you say that, Alex, because I understand there is irrationality in the markets. There's dumb money jumping in. There's people buying off FOMO and selling off, fear. And so what I find interesting as a day trader, you're in the weeds, you're looking at low time frame charts, and you can see the liquidity is different. There's more volume. But when you step back, you look at the forest from an aerial view, you can see that the stock market's in a very different place than it was last year. So my question to you is, as a day trader, potentially macroeconomic changes in the stock market could make big volatile swings, or trends could be shifting towards the downtrend. And if you're in the weeds, it may be hard to pay attention to notice where the stock market might be heading, in the coming months. And so, as a day trader, are you less exposed because you're in and out of the market often? Whereas an investor that sort of puts their stocks in, doesn't look at the market, and if there happens to be an impending retracement or crash, then maybe you have less exposure to that. How do you see that moving forward?
So I personally think, so I swing trade too, and my swing trades are, sometimes they could be 2 weeks, but it's not investing, right? Investing, you put something in, you're in for years, right? That's your goal. So I can tell you from day trading and swing trading, from day trading, I don't have any concern. And the reason I don't have any concern is because I'm literally the way I decide if I'm going to trade something, I look at the big picture first, the yearly, maybe 2-3 years. Then I look at the daily, the weekly, and the monthly to kind of give an idea of what the stock is telling me. How does it act, right? Every stock to me has its own kind of personality, right? They all trade a little differently, right? And so I kind of get that big picture. Then I zoom in slower over time, like 4 hour, 1 hour, 60 minute, 30 minute, 15, 10, 5, 1. And after I do all that, I kind of have a plan in mind because I'm starting to see things. I'm seeing where the big money is. I'm seeing where the dumb money is. I'm seeing what is the obvious triggers. And then I make my plan. So, and I'm usually in, and I think my average is about an hour. An hour is my average, like where I'll be in and out the market within an hour, the first hour to 2 hours of the market, and then I'm done. Now with swing trading, so therefore I don't really have a concern with what the overall market is doing per se. Now, but with swing trading though, all I can say is I have a plan, right? That's what's important. I have a plan when I enter my swing trade. Like when I buy Southwest, I think I bought it like $20. Like when I bought Southwest, I just say, you know what? Here's my buy price. I know where I'm going to get out at, and I know where I want to take profits depending on the chart. And in this case, for the swing trade, I'm looking at the daily, the monthly, and the weekly, right? I really want to see where this thing can go in the next week or two. And then from there, I determine my profit target based off resistance, right? Some heavy consolidation area that had a lot of sellers back in the day. I just don't want to assume it's going to break and go higher. So that's where I want to at least sell some. So I'll have targets, and then I'll have a trailing stop. So that way, if the market does just crap the bed, right? If it just craps the bed out of nowhere and I'm in some swing positions, which I won't even watch my swings. Like I'll put my swing in, and then I'll watch it like once a day. Like I'll just look at it at the end of the day, really at the end of the day, because you're not really supposed to touch them. So, and as a day trader, you're always touching stocks. So like, it's really hard if you watch it. So you just want to make sure you avoid it. So I avoid watching it. And therefore I have stop losses, right? That's important because if it does all of a sudden just have a hard pull and it affects the other stocks that I'm in, well, at least I'm protected. At least hopefully have taken profits along the way up. If I haven't, well, I've already accounted for the loss before I entered. So therefore it should be okay. But I can't give you an answer in terms of investors because I don't really invest in terms of that kind of way.
Definitely. And I think a lot of people that are just jumping into Robinhood, they're either thinking that they're investing or they're doing swing trading, but not as often they're in and out every day, right? So I guess my question to you, as you produce a lot of content, you've been advising people that are doing this sort of thing for a while now, is to those Robinhood traders that are doing swing trading and quasi-investing with what extra funds they have. What advice do you have for them? Is it just, be a scientist, have a plan?
I would say the chart is your friend, right? You need to learn. If you're someone who's just getting into trading, then I highly suggest you at least learn like watch the market, like watch the market every day. And if you're swinging, just watch the end of the day every day. If you're busy at work, just literally pull up the chart and you have to watch it the whole day. Just watch it once and then watch it again the next day and do that every day. And you'll start to pick up patterns. You'll start to see what happens when hit certain areas and develop little theories, especially when you're new. Learn what support and learn what resistance is. If you can learn those two things and get good at them, eventually that's all you really need to make a plan. Actually, that's the majority of what you need to actually make a plan, because you want to buy near a support level and you want to sell near a resistance level. And if you're short seller, you want to sell high, buy low, vice versa. So that's what I would tell everyone. Like, check out, there's so many books out there. There's some great authors who write books on, volume price analysis, because volume is that's another book. It's a really good book. It's a really huge factor in terms of, is it a right signal? Like, something might be bouncing off support, but if it has no volume, then it could be fake bounce. It could be a fake support. But if there's massive volume following a move, well, then there's good indication that there's big money there, that, Wall Street or someone who knows something we don't know, right? Or there's some news coming, so people are getting prepared. Like, that's important. And if you're swinging, find out when earnings comes out. Like, don't just swing and then not know what's coming, right? Like, you want to at least have an idea, because you don't want to put a position on and then the earnings comes out the next day and you had no clue, right?
Yeah.
And if you make money on that, you learn the wrong lesson. And if you lose money on that, you learn the right lesson, because you want to at least know before you get in. And so there's a plan of buying before earnings, because typically, not all the time, it depends on the chart. Look at the chart. The chart's your friend. But typically, you'll see stocks rising into earnings, and then they sell when earnings comes out, because we're human beings. We're disappointed all the time. I don't care if every time Apple comes up with news, we have people who are like, oh, that wasn't as good as I thought it was going to be. Or people are like, man, that's nothing. That's crap. Why did they do that? And then no one's really, truly happy. So there's always some kind of, not always, I can't say always, but there's a saying of rise into earnings and sell once they release. But then, yes, it could bounce and so forth. It's a quick move. But just know your chart's your friend, support, resistance, make sure you understand volume, and then start to be a scientist. Create your own plans, see if they work. If they don't, no big deal. Trading's free now for everyone. It's so dumb. Trading's it's free, which is great. And so trade small. Just trade one share till you get consistency, and then slowly grow that.
Yeah, all great points, Alex. Amazing. And we're running out of time, but I know you have a podcast and you have training tutorials and sessions. What's the best way for the viewers to follow along with your work?
Thanks, man. So it's Be the Trader. I'm on all podcast platforms as well as YouTube. Just Be the Trader or Be the Story. And it's just the letter B. And it's all free. Like, I literally don't ever plan to do a service. Like, I don't do any service. I don't charge anything. It's all like just stuff I want to give back, because of the long story short, so I can wrap this up for you guys. The reason I created this truly and heartily is to share with my future, generations, so they can see whether I fail 10 years from now or make it. You just keep working hard, you keep pushing, and you never know where you can go. Like, you just never know. So I wish everyone out there luck on your own trading, and you can find me on all platforms, Twitter as well, and social media as Be the Trader or Be the Story. Sorry about that. Be the Story 87.
Awesome, Alex. I will leave the links in the description box below as well for the viewers. Thanks so much for the time. It's been a pleasure speaking with you, and all the best in the markets moving forward.
Thanks, man. You too, man.